Welcome back to Investing Talk Podcast.
Today we're looking at Reddit.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really does help the algorithm find other investors like you who are trying to cut through the noise.
And speaking of noise, we are talking about a company today that, well, ironically built its entire business on it, or, millions of conversations happening all at once. We were looking at Reddit, ticker RDDT.
Right.
And I think we have to frame this correctly right off the bat. For years, people just saw Reddit as a social media app, a place for memes, video game tips, maybe some political arguments.
Sure, the front page of the internet,
Yeah.
but one that always had a really hard time actually making money.
Exactly. But looking at the data we have now, specifically these Q4 2025 earnings that just dropped, we're not looking at a messy social app anymore. We're looking at a data powerhouse that's really starting to mirror the early days of Facebook, or, well, Meta.
Okay, hold on. That is a massive comparison. I mean, Meta is a trillion-dollar juggernaut. Reddit's always been the scrappy underdog. Are we really saying the business model is shifting that much?
I think so.
Because from where I sit, looking at the skeptical side, I see a lot of hype around AI licensing and data deals. The question is this a sustainable business engine, or is this stock just, riding a narrative wave?
That's the debate, isn't it? But here's the catalyst that I think changes the whole conversation. We're not just looking at revenue growth, which we'll get to. We're looking at a capital strategy that usually belongs to a mature cash cow, not a high-growth tech stock.
You're talking about the buyback.
I am. The massive $1 billion share repurchase program.
Yeah, I saw that headline and I did a double take. We have to unpack that because honestly, it's a little confusing. Usually a company in hyper-growth mode, they burn cash, they pour every single cent into R&D.
Server farms, yeah.
Right. They don't give $1 billion back to shareholders. So is this a sign of strength, or does it mean they've kind of run out of ideas on how to grow?
I think it's a former, but let's dig into the fundamentals first to see why they can even afford to do this. Because if you think this is all hype, the revenue numbers might just change your mind.
All right. Let's get into the hard numbers then. Walk me through the trajectory here.
So we just got the full year 2025 numbers. Reddit brought in $2.2 billion in total revenue. That's 69% year-over-year growth.
69%. Okay, I'll give you that. That is not a mature, slow growth number. That's hyper growth.
It is. And if you think it was just a fluke early in the year, just look at Q4. Revenue surged 70% year-over-year to $726 million. So the growth isn't slowing down. It's actually accelerating a little as they scale up.
Acceleration is key. But I have to play devil's advocate. Revenue's great, but where are the users coming from? Because if you're just squeezing more ads in front of the same people, eventually they get annoyed and leave. Is the user base actually growing?
It is, and that's the second pillar. Daily active uniques, the DAUQ, they're up 19% to 121.4 million. Now, I know 19% doesn't sound as exciting as 70% revenue growth.
It's respectable, but yeah, it definitely lags the revenue jump.
Right, but that gap, that delta between 19% user growth and 70% revenue growth, that is the most important metric on the whole sheet. It proves their monetization efficiency is just skyrocketing.
So they're getting more value out of each user.
Way more value than a year ago. It shows the ad demand is there and the segments are performing.
All right. Okay, so they're monetizing better. That's the efficiency play. But let's go back to that Meta parallel you mentioned. When I think of Meta's moat, I think of the social graph. Your grandma's on Facebook, so you have to be too. Does Reddit really have a moat like that? Feels like people could just, go to another forum or a Discord server.
I disagree. I think Reddit has a competitive moat that is arguably stronger for this specific era of tech we're in. It comes down to network effects, but not in the way you're thinking. Those 121 million users aren't just posting photos. They're having these threaded, nuanced conversations.
Yeah, arguing about whether a hot dog is a sandwich.
Exactly, but think about what that is. It's human dialogue. It's question and answer. It's debate. And this creates a proprietary data moat. You can't just scrape this off the web anymore. You need API access.
Yeah.
This is the AI angle everyone is buzzing about.
For training large language models, you mean?
Precisely. LLMs need what's called reinforcement learning from human feedback. They need to know how humans respond, how they correct each other, how they use sarcasm. Reddit is the world's largest archive of that conversation. Competitors, even Meta, can't replicate these niche communities at scale. Meta has data on who you know. Reddit has data on what you think. That data is fueling these AI training partnerships.
So when we see that high ARPU, average revenue per user potential. It's not just banner ads. It's them licensing the content itself.
Exactly. It's a high margin stream on top of the ad business.
Okay, that clarifies the revenue quality.
Mhm.
But I want to circle back to the elephant in the room, that $1 billion buyback. You said it signals strength. I still want to challenge that. A company growing at 70% should have 1,000 places to put that cash. Why buy back stock? Is it possible management just doesn't see any good acquisitions out there?
It's a valid skepticism. Usually buybacks are for, banks or utilities. But in this case, I see it as a signal of incredible balance sheet flexibility. They have no noted debt pressures. Their free cash flow generation has improved so much that they can do two things at once. They can reinvest in the AI and data infrastructure and support the stock price.
So it's basically a floor. They're saying, we'll support the stock if it dips.
It's more than a floor. It's a statement that they believe the stock is undervalued even at these levels. It kills the fear of dilution. Usually, growth tech companies pay employees in stock, which dilutes shareholders. This buyback just soaks all of that up and then some.
All right, so they have the cash flow to back it up. That does change the risk profile. Makes them look less like a speculative startup and more like a real business. Let's see if the market agrees with you. Let's pivot to the charts.
The technicals are painting a really interesting picture right now.
They are. I'm looking at analyst coverage first. The street is definitely chasing this move. We saw Argus raise their price target significantly from 250 all the way up to 300.
And $300 isn't just a random number.
No, it's a big round number. It's psychological.
Right. When you see targets moving to a psychological resistance like that, it tends to act as a magnet for the price. And it wasn't just Argus. Evercore ISI initiated coverage with an outperform rating. When you get new coverage with a buy or outperform right after an earnings beat, it just creates structural support for the price.
Let's talk about that structure. You said this looks like early meta.
Yeah.
What do you mean by that from a technical, from a chart perspective?
Well, look at the breakout momentum. We are seeing a series of higher highs and higher lows. The stock isn't just spiking and then crashing, it's stair-stepping its way up. That implies that every time the price dips, buyers are stepping in.
And that brings me to the volume and flow data. I'm looking at the implied volatility. Often when a stock runs this hot, up 70% on revenue, stock chasing highs, you expect to see the smart money taking profits. You expect gap downs where institutions are dumping shares.
And are we seeing that?
We aren't. And that's what's surprising. No significant gap downs mentioned. The flow is positive. The implied of all suggests accumulation people are positioning for the stock to go higher, not hedging for a crash. So, despite some neutral sentiment scores, which we should get to, the actual money flow is saying buy.
That aligns with the institutional interest. When the big funds don't sell the rip, it tells you they're looking at a longer time horizon. They aren't just playing the earnings pop, they're playing the multi-year cycle.
Okay, checking the pulse of the market, let's see what the media is actually saying. Because the numbers are one thing, but the narrative that drives the stock in the short term. We pulled some headlines from late Jan and early Feb 2026.
And it's a mix, which is honestly healthier than just pure euphoria.
Yeah, pure euphoria usually means it's the top. Let's start with the bearish side. January 23rd, 2026, we have this headline. Reddit needs to grow like Meta while facing tougher challenges. This article was citing user risks, basically saying it's just harder to grow a social network now than it was in 2012.
Which is a fair point, but then look at the day before, January 22nd. Reddit. Parallels to 2012 Facebook. That story was focused entirely on the early monetization. So you have this duel happening in the press. Is it too hard to grow versus look how much money they're making?
And then January 10th, you have that bullish signal we mentioned. Reddit price target raised to $300, Argus. And finally, the Q4 earnings transcript itself on February 5th, which was treated as neutral to positive.
So if you tally it up, the overall mood is mildly bullish. I'd say 3 out of the top 5 stories are leaning positive. But there is one piece of institutional flow that I think is the most important signal here.
The 13F filing.
Yes. The update from Bailey Gifford on their Q4 2025 portfolio.
And for those listening who might not follow individual fund managers, tell them why Bailey Gifford matters.
Bailey Gifford is legendary in the growth space. These are the investors who made their name betting big and early on Amazon and Tesla when everyone else thought they were overpriced. They don't look for 10% gains, they look for 10x returns. Their 13F update signals a potential accumulation in names like Reddit. If they are building a position, it means they see a decade-long runway, not just a good quarter.
That is a serious vote of confidence. When those guys enter the room, other funds tend to follow. Plus, you have these speculative catalysts floating around, these rumors about early-stage AI data licensing expansions.
Right. If they announce another big deal with a major AI lab, that just drives the ARPU upside even higher.
Okay, so we have the growth, we have the smart money buying, we have the technical breakout,
Hmm.
but what could go wrong? We have to look at the downside.
There are definitely risks.
The biggest one for me, and it ties back to that tougher challenges headline, is regulation and youth.
The social media restrictions narrative.
Exactly. We're seeing this global movement around youth social media restrictions and addiction awareness. Governments are getting aggressive about age verification, limiting screen time. Reddit has a very young demographic. If legislation comes down that bans under 16s or severely limits access, that threatens the DAUQ growth.
It does. We just celebrated that 19% user growth, but if a big chunk of that gets regulated away, the whole growth story takes a hit.
And can that 19% even persist if regulations tighten?
Yeah.
And if the users drop, the data volume drops. It's a flywheel that can spin backwards.
It's a risk. And then there's the monetization ceiling. We keep comparing them to Meta, but let's be real. Facebook and Instagram are visual shopping malls. Reddit is text. There is a risk that they hit a ceiling on ad revenue because the intent to buy just isn't as high on a Reddit thread as it is on an Instagram story.
That's true. I might look for reviews of a vacuum cleaner on Reddit, but am I clicking a banner ad while I'm there? Maybe not. So is the comparison to Meta too generous?
It might be. But here's the rebuttal to both of those risks.
Let's hear it.
I would argue that these risks are pretty much priced in. The market knows about regulation. It's been in the news for years. And despite that, Reddit just delivered 69% revenue growth. They're navigating it.
So the execution is just trumping the fear.
Exactly. And again, I go back to the $1 billion buyback. That is the ultimate vote of confidence. Management sees the internal data. They know the regulatory landscape better than we do. If they thought a user ban was about to crush their business, they'd be hoarding cash, not spending it on their own stock.
That's a strong point.
Yeah.
Actions speak louder than words. The buyback is them putting their wallet on the table and saying, we are not worried.
And the Q4 beat shows the monetization challenges are being managed. They're finding ways to make money that aren't just dependent on banner ads, like the data licensing we talked about.
All right, we've covered the fundamentals, the charts, the sentiment, and the risks. It's time for the verdict. If you had to put a number on this setup, where do we land?
I've been looking at this from every angle, and I am feeling bullish. I'm giving this an 8 out of 10.
An 8. That's one of your highest scores this season.
It is. Here's the investment thesis. Reddit is showing explosive monetization that mirrors early Meta. You just can't ignore 69% revenue growth hitting $2.2 billion. That is raw power. Then you add the unmatched community data moat, which is becoming a scarce resource for AI, and you have a truly unique asset. And finally, you have that $1 billion buyback providing a floor for the stock price.
So you have high growth protected by a safety net.
Exactly. The analyst targets are hitting 300. I think the horizon here is you buy now for multi-year compounding into the 2027 earnings cycle. This isn't a trade for next week. It's a position for the next couple of years.
I have to agree with you on the buyback argument. Even as a skeptic, it's really hard to bet against a company that is growing at 70% and buying back its own shares simultaneously. That combination is incredibly rare. It suggests they've cracked the code on profitability.
The transition from social app to business data engine feels complete. Now it's just about scaling.
Well, there you have it. The bull case for Reddit seems to be getting stronger by the quarter. Whether you're worried about the regulations or excited about the AI data, the numbers don't lie.
They certainly don't.
That's it for this one. We hope this breakdown helps you navigate your own portfolio.
Subscribe, like, and comment if you want us to cover more stocks like this. And let us know, do you think that $300 target is realistic?
Thanks for listening. We'll catch you in the next one.